Okay, what exactly do you mean by tax efficient property? Okay, so I'm not an accountant and I don't pretend to be one on the internet. However, there are some general tax deductions that are applicable to investment properties owned in Australia that I can outline. You're able to depreciate the full constructed portion of the dwelling from the date of completion for a period of 40 years. So essentially what that means is whatever the property cost to build when it was built is available as a tax deduction if it's within 40 years of construction. So, for example, if you buy a property that is 30 years old and it cost $100,000 to build 30 years ago, you're able to claim depreciation on that $100,000 for the next 10 years. Note that the older the property is, the less time that you have to claim this depreciation, as it's typically a 40-year window, and the cheaper the build cost of the property. If you purchase a brand new property, for instance, this will maximize the tax effectiveness of your investment due to the higher build cost, and in addition, you'll also be able to claim the full replacement value of the fixtures and fittings, things like light fittings and curtains and carpets and air conditioning units, etc., for the first 5 to 7 years. Unfortunately, as of 2017, if you have an older investment property, even just a couple of years, these deductions are not available to you. But if you're a renovator and you've done some work on your property, maybe you've replaced a kitchen or a bathroom, any capital improvements that you make are generally tax deductible. The downside here being they're not transferable if you were to sell the property. To assist your accountant, you should always have a depreciation schedule commissioned for your property, and that should outline, or that will outline, if any of those deductions apply to you. Also, as a general rule, almost all costs, apart from stamp duty, related to the purchase and running of the property are also a tax deduction. So things like the interest on the loan, lender's mortgage insurance, landlord or building insurance, body corporate, maintenance, legal fees, bank fees, and I'm sure a few others that I've forgotten to name. Again, we are not accountants, so make sure that you see your investment savvy accountant before acting on tax advice, but I hope this helps.